Well, welcome back to New Money. I love the new format. You know, I'm a blue person, and often people say to me, why do you only wear blues? Well, I just love the blue color. Anyway, we're discussing investments this evening. My guest, David Shapiro. And if you'd like to email, you can send your email to info@anchorcapital.co.za. David, last year we was talk about good recovery in the South African market, because, I mean, it looked like a lot of our stocks were cheap. However, we put the slide up many times, 80% of our companies earn more than 75% of their earnings offshore. So are there any true South African companies that earn their money predominantly in South Africa?
You've got to dig deep, and there are a number of good small businesses in that. The unfortunate part about that is that they haven't got the muscle in terms of liquidity. In other words, they're not that big that large institutions managing a huge amount of cash can build up big positions. So the poor, institutions who have to invest in South Africa because of Regulation 28 have to go for the Naspers and the BHPs and the ABN BEVs and all those very high cap businesses. But I think from an individual point of view, you can probably put 10, 15 really good companies outside of those, in which I think you'll do reasonably well. But it's a difficult place to construct a portfolio.
So
that's why we go
if
offshore.
someone came to you with 5 or 10 million rand, and they said to you, I'm a growth investor, and it's amazing, people tell you they're a growth investor until the market starts dropping. Then all of a sudden, that's all forgotten. I've got a 5 to 10 year time horizon. I had a client, I remember last year, he said, I've got 10 years, that's 120 months, and after 4 months, he started to panic. I said, but you still got another 116 months to go. But if someone came to you with a large amount of money, what percentage of that money would you take offshore? And maybe this is not the right time to take it offshore at 19. I don't know whether your balance is right between buying equities now and taking money out at a higher level, or investing in the South African market.
It depends. If it was an equity portfolio, then I'd be 100% offshore.
And you still
just for the simple reason is that the quality of those businesses is far superior to anything we can get here. And why I say that, this is not political. I measure I go through every result that comes out in South Africa, and I look at the businesses and I say, can that match anything I can get offshore? And, I like to buy growth companies, and I like to buy companies that are at the forefront of where money's being spent. That's why I'm a little bit of an AI freak. I like what's happening there, and I like the theme going forward, and I'm very bullish to a point. You've got to moderate your risk as well. But I find it very difficult in South Africa to meet those companies. I got to say something else as well, just to give comfort to people listening. You can't find those companies in the UK and Europe. There are a few in the Amsterdam and that you can find, probably more, but nothing in Australia as well. So it's not South Africa. It's just quality of global companies and the US businesses that are really far ahead of anybody else.
David, I think you've got inside information to Australia, because you've got a brother, older brother. Your brother still in the markets?
Yeah, he does it privately.
And where does he invest? In Australia?
Well, I shouted him to invest offshore.
Yeah.
His Australia portfolio is always under pressure. He makes money offshore in the US.
So even in Australia,
David, it took a bit of a arm twisting to get him to start looking outside of Australia.
Well, for many people who've been in the market for years, they would have known your brother Harold, who was in the market following your dad.
My son's a journalist.
I mean, your family. I mean, your dad wore that badge, Bar Gold, the late Archie. I mean, he was a famous man on the floor. He'd find it very different today, the way we trade.
He would have loved 2024. He would have loved the gold price last year.
David, so let's just talk about one thing. 8 weeks ago, I'm sitting in my office on a Friday morning, watching the market, watching the rand at 17.04, waiting to see the first breakthrough to below 17. It never happened.
No.
Now we're back at 1914.
1914,
Do you think
it's all dollar? It's all dollar. It's money going into dollar. And at that stage, you would have seen that the 10-year bond in the US was 3.6%. It's now 4.7%.
So it's moved up again, eh?
Massively. It sounds like what?
Just think 1% in America.
Yeah, it's a worry of what's coming. It's a worry that inflation is not under control. And my theory is that I don't think central banks have got on top of inflation post-COVID. They're still battling to understand what COVID did and the world that transpired after that. Remember, we also had the Russia going into Ukraine, which also unsettled the markets, and various other various other markets, not only on the food side, but on the commodity side, shipping side. All of those were disturbed by that. Supply chain was the word I'm trying to...
On Friday, I had a Teams meeting with an American.
Yeah.
And he told me, this is what he said, I've got no idea, that Trump next week is going to sign 100 executive orders. Although he did say, South Africa's only on page 9. Everyone's worrying about it. I don't think Trump's worrying about it. But he's got a hell of a job because, if you think about when he came in 2016, when you think about, or 2017 when he first came in, no one loved him. Everyone hated him, wanted to fail. I think there's a different view now. I think people want him to succeed. They want him to do what he said he was going to do. The wars, the immigration, the tax cuts. They want him, and they want him to succeed.
I think they want America to, I don't want to say MAGA, make America great again, but I think they want to move America from being a leftist, which is where it was tending, to somewhere in the center. Americans are generally conservative people, and I think leftist policies were beginning to grind on them as well. And that's why he made so much progress, even in states that were very blue. If you go to Massachusetts or New York, etc., although they were still won by Democrats, you could see that it shrunk. His popularity. His popularity increased. The margin shrank.
Well, next week's going to be an interesting week. What's going to happen in the markets next Tuesday?
It's already in the markets. I think they're worried. They're concerned about it. I think after it happens, we might start to see some recovery. But we're not quite sure what he's going to unleash. Look,
David, I've got to get to some emails. Billy in Cape Town, he says, I've followed this program for years, and I know that the investment segment of You and Your Money does not comment on individual shares. However, I've held Capitec for years, and because of its good performance, I am very overweight. What is your view of Capitec overall compared to the other banks? Capitec has been, it's always been too expensive. Hey, David,
always it's going to continue to be expensive because it's a good business and it knows what it's doing. It's got a wonderful management team. It's got a very loyal customer base. They're not going anywhere, those customers, no matter what the other big banks do. This is the growth. If there is growth in the South African economy, I think Capitec seem to have captured it. I like the business and I like what they produce. Forget about what your analysts say to you. Forget about PE ratios and all the other kind of things that you learn when you do your finance degrees and your CFAs, etc. Understand their business and understand how the customers like it. And I think it might weaken slightly being a D-rating, but it's still an excellent business. And we made the big mistake by not buying it and not continuing to follow it. A very, very solid South African business. It's one of those 15 that we were talking about.
Okay, to our viewers, we don't tip anything about shares. David's just answering a question that a particular viewer has put in, saying it's a good bit. He's not making any comments about whether to buy or sell. Jack in Rouville says there are a lot of positive articles about the possible recovery, particularly with prices in Gauteng. Can you see any reason for property prices to pick up, and what is your view of investing in REITs? I must tell you, David, I read so many articles this weekend that are so bullish about property, but all written by estate agents.
I wish I could share your... Look, it depends. I think if you're in Cape Town, in certain areas in Cape Town, or you're on the coast and retirement areas, and I think property prices are going up.
But he says REITs. Real estate investment trust.
We're still a little far. We've got to have rates coming down here. They were on a downward trajectory, but suddenly now with US rates going to remain where they are, I'm not sure we're going to get rate reductions here. Remember that companies still have a lot of expenses. Expenses are still going up. Electricity price, even though you're getting electricity, prices are still going up. So I think the REITs are squeezed. I've always had high regard for the way that our companies have been run, but and the yields are quite attractive. But I still think there's time before, there's some time before we start to see the economy pick up and REITs start to pick up like we'd like them to be. They're going to be steady. I don't think they're going to fall in a heap. So you can always protect yourself.
They did fall in a heap during COVID.
Yes, but now they're probably bottoming and starting to move up as well. At what pace they'll pick up, I'm not sure. But your returns are fairly decent there.
Yeah. Basil Hillcrest says, what does it mean when stocks like Tencent are added to a blacklist of companies by the USA Defense Department?
That's not good. It's not good, of course. Does it mean anything? I'm not quite sure. But for Tencent, I think it probably means that foreigners are not going to be able to buy it. And I'm not quite sure. You're not going to be able to trade with it or supply things to it because it is associated with the military. And that has a direct impact on Naspers and Prosus, and we've seen both those share prices are down in this year alone, 10, 12%. So it's not a good sign, and I think it's a sign of what things are going to come in the isolation or polarization of China. That's why you've got to be very careful of when I say Chinese policy, your Chinese investment policy.
David, last email we can get this evening, I'm going to sneak it in. Philippa in Emirates says, what would the impact be if the government of national unity collapses?
Disaster.
For South Africa?
It'll be a disaster. It'll be a total disaster. We haven't seen what we want coming out of it yet, but certainly everybody's trying. Maybe the results are not as speedy as we wanted them, but I think that will be a total disaster. And foreigners are watching carefully. They've written it up positively, but let's see.
Yeah. Well, it's important to remember that markets do not work on a calendar. Markets work on cycles. While it's exciting to have stocks that can perform at 30 to 40% in the year, investors do not always see the other side where stocks underperform at the same level. Markets are driven by fundamentals. However, the news of the day is what affects daily performance. While everyone is looking at the best performing indexes and questioning why their portfolio is underperforming, well, it does not match up to the index that maybe they've compared to. On the flip side, in all my years, which this year is 60 years in this industry, can you believe that? I've never found an investor who, when indexes drop, as they have in many years, 20 to 25% a year, are happy that their portfolio only dropped 9%. I'd like to thank David for joining me this evening, and once again, good wishes to our viewers for the good year, and I wish all of your children who've just written matric great results today. It's important to note that our program is to provide information and should not be construed as advice. Next week's program, we'll be dealing with short-term insurance. If you need to get hold of me, my details will appear on the screen. I'd like to thank you for watching, and good night.